Today, more trouble at Binance. The SEC drops a major lawsuit against the world's largest crypto exchange. JPMorgan turns to blockchain technology for dollar trades in India's newest financial hub. And Richard Mico of Banxa answers whether a new crypto regulation bill in Washington gives the industry what it's been asking for: regulatory clarity. Welcome to CNBC's Crypto World. I'm Pippa Stevens. Digital currencies are lower to start the week, with Bitcoin trading at the $26,000 level, Ether trading around $1,800, and Solana falling to around $21. Okay, we begin with breaking news for our top story. The SEC sued Binance and its founder Changpeng Zhao, alleging that they worked to attract U.S. customers, commingled investor funds with their own, and violated securities laws. The 13 charges come after the CFTC unveiled a similar complaint against Binance and Zhao in March. Zhao dismissed the allegations on Twitter. Meantime, citing bank records, Reuters reported today that a senior Binance executive was the main operator for 5 bank accounts belonging to what's supposed to be the crypto exchange's independent U.S. affiliate, including an account that allegedly held funds of American customers. The outlet added that those records showed that Silvergate authorized the executive to operate the accounts in 2019 and 2020. Now, we reached out to Binance US, and Silvergate Bank for comment, but didn't hear back right away. Next, at least $35 million worth of crypto assets have been taken from Atomic Wallet users since June 2nd, Cointelegraph reported, citing on-chain researcher Zach XBT. Atomic Wallet took to Twitter to say that the cause of the hack is being investigated. Cointelegraph reported that some transaction histories have been erased and that even entire crypto portfolios have been stolen. Zach XBT wrote on Twitter that the largest single victim is for 2.8 million USDT, and there were multiple other losses in the 6-figure region across different chains. Last, JPMorgan will use its blockchain platform Onyx to settle dollar transactions among 6 banks in India's newest financial hub. A spokesperson told us the partnership with those banks comes after approval from the International Financial Services Center Authority to develop and pilot a solution to settle interbank U.S. dollar transactions. The spokesperson also said that right now, clearing and settlement arrangements are handled through overseas accounts that are bound by weekends and holidays. According to JPMorgan, the pilot will lay the foundation for blockchain-based infrastructure that will be able to support foreign exchange transactions and can be used for several use cases in the future involving settlements for all other kinds of tokenized assets. All right, on to our main story. Republican lawmakers dropped a new crypto bill on Friday that would split responsibilities between the SEC and CFTC. Crypto World's Jordan Smith spoke to Richard Mico, the U.S. CEO and Chief Legal Officer of Banxa, to discuss whether the bill gives the regulatory clarity the industry has been asking for.
So thank you for joining me. We have this new bill from Republican lawmakers, which has some sweeping changes for digital assets and the SEC. It proposes a clearer line of authority between the SEC and CFTC, and it clears a path for crypto securities to be traded on alternative trading platforms, which are regulated by the SEC. If you're looking at this bill, is this the right move? Is Congress clearly defining multiple agencies the right way to go about this, rather than creating a new one, or saying that one agency should be responsible for crypto regulation?
Yeah, it's a really good question. I think first and foremost, this represents a really meaningful and promising step forward in the regulation of the digital asset space, and is going to encourage the right debate between both sides of the House and regulators more generally. I think the most important thing is that it strategically positions the US again on the world stage as it relates to the digital asset space, and overall represents a vote of support in the digital asset space. Specifically, as you indicated, with respect to the SEC and the CFTC, look, it's very, very clearly creates a delineation between the role and the jurisdiction of the SEC and the CFTC. Most notably, obviously, the SEC to regulate the digital asset space, and the CFTC to regulate the digital asset commodities.
So you mentioned there the idea that this sort of puts the U.S. back in play in terms of crypto regulation as the rest of the world is moving forward with their own rulemaking. Does this instill some sort of confidence for the crypto industry that there will be clearer rules here, especially when they've been asking for regulatory clarity for so long?
Absolutely. This is an absolute vote of support for the digital asset space. There's been a continued lack of regulatory clarity in this space for a very long time, notwithstanding the fact that there's been continued calls by many in industry for that clarity, and unfortunately the SEC hasn't been forthcoming. So ultimately it is up to the lawmakers to provide that regulatory clarity, and what is abundantly clear from this draft bill is that that they're taking the digital asset space seriously, and they want to provide the regulatory clarity that's absolutely necessary to encourage investment back in this space, which unfortunately for the US is continuing to be lost at the moment as the major players in the space are looking to alternative jurisdictions.
I have to ask, is there a loser in this fight or in this new bill? I mean, when I ask that, I guess I'm specifically asking about the SEC, who said that most of crypto falls under its jurisdiction as it stands now. So are they losing ground here, or is there a loser when you look at the draft?
Yeah, absolutely. Look, I think if you look at it from the SEC's point of view, Gary Gensler has been very vocal in the view that everything but Bitcoin and possibly Ethereum are securities and therefore within the purview of the SEC. The introduction of this draft bill potentially paves the way for many of the digital assets to not be digital asset securities, rather to be digital asset commodities and therefore within the jurisdiction of the CFTC. So on that basis, you would have to say that the jurisdiction and the role of the CFTC is absolutely increasing and the role of the SEC would be decreasing. So taking that forward, absolutely you would have to say the SEC would be the loser in this particular circumstances. But I think it's also probably worthwhile touching on who are the winners of the draft bill. And as we kind of mentioned, the CFTC absolutely here is a principle-based regulator, whereas the SEC is more of a rules-based regulator. So I would absolutely submit that the CFTC is much better equipped and placed to actually regulate what is a very innovative space, such as the digital asset space.
What's the likelihood that this gets passed? If we talk about all of the crypto bills that have come through Congress in some sort of draft phase, we haven't really seen any progress there. So realistically, how optimistic are you that we will see some sort of legislation here or at any point in 2023? Are you confident at all that we'll move forward with a crypto regulation from Congress?
Yeah, look, my view is that the digital asset space is going to be a key element that's going to drive the 2024 elections. And in that view, with that perspective, I should say, whether it be this bill or another bill moving forward, I think absolutely the US has now taken the view that it's absolutely imperative for it to move thoughtfully, strategically in regulating this space in a very proactive manner, which allows and encourages investment in this space.
You mentioned that you see crypto becoming an even bigger force in 2024 in politics. I was speaking to Bruce Rogers at the Bitcoin miner LM Funding last week, and he argued that the crypto industry doesn't really have a lobbying force. It hasn't really made a case for itself in Washington so far. So if you do see crypto becoming a bigger player in the next year, how do you see that changing? How do you think the industry should adapt to become either more of an advocate for itself or potentially making the case that it should be regulated or should be taken seriously by lawmakers?
Yeah, it's a good question. I would argue that the digital asset space has very vocally and intentionally tried to create meaningful, open, transparent discussion with the regulators and lawmakers over an extended period of time. Unfortunately, that hasn't been as productive as one would have hoped. And then, that follows off the back of, some collapses and some unfortunate events that occurred in 2022, which is, I suspect, kind of led to some knee-jerk reactions here. But look, the US is absolutely seeing, jurisdictions like the UAE, Hong Kong, Singapore, the UK, Australia, and Europe really taking a proactive and open approach to the crypto asset space. And the US is losing, if not has already lost, its mantle as the leader of the digital asset space. And the biggest adopters of the crypto asset space are those between the age of 20 and 40, and they're becoming increasingly more important as it relates to elections, particularly leading to 2024. And we've seen some of the support that potential candidates such as Kennedy and DeSantis are getting in being incredibly vocal for the digital asset space. So my view is that the crypto asset space and candidates' position to the crypto asset space is going to be a very relevant factor as we lead into the elections of 2024.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.